Hello everybody, welcome back to my channel. Welcome to a new video. So, in our previous video, we completed the portion of our Unit 2 ledger. So, in today's video, we are going to solve a sum, the journal and the ledger of this sum, illustration 2 of our study material. So, let us start. The chapter 1, sorry, the paper 1 of CA Foundation Principles and Practice of Accounting, chapter 2, Accounting Process, unit 1 Journal and unit 2 Ledger. So, in this sum, for this sum, we would be journalizing first and then we will be posting these entries in the ledger, or in the ledger we will be posting these entries. So, the first information provided in this sum, is the debit balance. The debit balance as on the opening date. Cash in hand, rupees 8,000. Cash at bank, 25,000. Inventory of goods, 20,000. Building, rupees 10,000. Trade receivables, Vijay rupees 2000 and Madhu rupees 2000. So Vijay and Madhu both are trade receivables. The business of this trader is going to receive money from Vijay and Madhu. Next, the next entry is the credit balances as on the opening date. So we all know some some ledger accounts carry debit balances such as the assets, expenses, mainly the assets, expenses, and incomes are transferred to the profit and loss account. Assets carry debit balance and all liabilities or obligations carry credit balances. So, the credit balances as on the opening date is the trade payables Anant rupees 5,000 and capital rupees 55,000. So, what is the capital? Capital is the money that is inflowed or that is introduced by the owner of the business. Our first entry, the first transaction. Following were further transactions in the month of January. January 1st, the first date of January, purchased goods worth rupees 5,000. Purchased goods worth rupees 5,000. Payable at a later date. Payable at a later date means these are credit purchases. These are credit purchase. Cash is not paid. These are credit purchase. For cash, less 20% trade discount. Purchased goods worth rupees 5,000 payable at later date for cash less 20% trade discount and 5% cash discount. So payable at a later date, but the purchase were in cash. And due to the payment of cash, the trader received a trade discount, a cash discount. Trade discount, always remember, trade discount is levied or trade discount is given for bulk purchases, and cash discount is given due to bulk cash payment. The next entry, as on January 4th, received rupees 1980 from Vijay and allowed him rupees 20 as discount. January 8, purchased plant from Mukesh rupees 5,000 and paid rupees 100 as cartage for bringing the plant to the factory and another rupees 200 as installation charges. So, this rupees 100 as cartage and rupees 200 as the installation expense are paid only once for the lifetime of this plant. For the entire lifetime of this plant, these expenses are once in a time or once in a lifetime. That is why both this rupees 100 and the rupees 200 would be capitalized. These will be included in the cost of the plant. Next, January 12, sold goods to Rahim on credit rupees 600. Sold goods, sales. Then January 15, Rahim became insolvent and could pay only 50 paise in a rupee. Very important point. 50 paise in a rupee. He could pay only 50 paise in a rupee. So, what is this 50 paise in a rupee? We all know 1 rupees. 1 rupees is equals to 100 paise or 100 paise. So, accordingly, 50 paise in a rupee, 50 paise out of 100 paise. Then what is the percentage? 50 divided by 100 into 100, that is payment is done for the 50%. 50% payment is done and other 50% is the bad debt. I hope this is clear, and this is the working note for this point. January 18th, sold goods to Ram for cash. For cash, sales was made. So, first of all, we need to journalize the transactions. We all know that transactions are journalized. Opening balances and closing balances are not journalized. There are no journal entries for the opening balances and closing balances. Therefore, we must draw up we must draw up the journal entries for the transactions. Please bear with my lines because as I'm drawing freehand, it's a bit improper. So we would be adding later on lines. Now the journal entries. We all know journal has 1, 2, 3, 4 and 5 columns. Now you are going to name that in your mind, okay? The 5 columns in a journal. So let me write. First one is date. Date why? Because journal entries are written in a chronological way. To identify a transaction, date is given. Next part is the particulars. Date particulars. Then the LF. What is the LF? LF is the ledger folio. This column is mainly kept empty in many of the sums, but the work of this ledger folio, this column ledger folio, is to write the page number of the ledger book, the page number of the ledger book where the entry is passed, where this entry is transferred. Then our next column is debit. This is the amount column, that is why rupees debit. All debit balances would be written, and the last column is the credit. All the credit balances will be written. So first of all, our first entry, January 1, purchased goods worth rupees 5,000 payable at later date for cash less 20% trade discount and 5% cash discount. So purchased goods worth rupees 5,000. What would be our entry? In the first column, first of all, we need to write the year. The year is January 2020. So this is the year 2020. In the first date column, we need to write 2020. Then January 1st. Now our first entry. I hope my handwriting is clear. purchase account debit to purchase account debit to cash is payable on a later date, but cash discount is given. The balance, the purchased goods for rupees 5,000 payable at a later date. For cash less 20% trade discount. So 20% trade discount. The goods is for 5,000. The goods is worth rupees 5,000. But 20% trade discount is provided. The company or the firm from whom the goods are purchased give us a 20% discount. So minus 20%, this value would be transferred to the books of the firm. Purchases were for, so let's open up the calculator. So now I hope the camera, this calculator is visible. So now let's start our calculation. First of all, 5,000 minus 20 percentage. So yes, we are back. We had some technical problems. 5,000 minus 20% trade discount. The 20% trade discount would be 4,000. So our goods are valued. Sorry, our goods are valued for rupees 4,000. 4,000 is the value for our goods that is present with us or that is purchased by us. But there is a 5% cash discount also. 5% cash discount. Why? Due to the payment of cash. We paid in cash immediately, and that is why there is an additional 5% cash discount. So from here, 4,000 minus 5 percentage. So 4,000 minus 5 percentage equals to 3,800, and this 3,800 is the final payment. This 3,800 would be finally paid, and that is why what would be the journal entry: purchase account debit to cash account to discount received account. Why discount received? Because the purchase value of the goods is rupees 4,000, but we need to pay rupees 3,800 as the cash. We need to pay rupees 3,800 as cash balance, and that is why we need to write up rupees 200 as a discount that is availed by us, that is available to us. So our purchase account debit 4,000 to cash account means cash outflow 3,800, and the discount received is 200. So we have to end this with a narration. Being goods purchased. So one suggestion for you, you can write as much as you want in this being section. It should be understandable and in brief. But as a suggestion, as your elder brother or senior, I would like to suggest to write small narrations, small phrases as your narration. Always remember, a narration starts with a being, but the narration should be small enough so that you can solve your sums, you can solve your problems in a short time. Because in our CA exams, the time is short, we lack out of time, and that is why we need to manage our time properly. and to properly follow our time, to remain within the time limit, we must save our time efficiently. So our next transaction is on January 4th. Received rupees 1980 from Vijay and allowed him rupees 20 discount. So Vijay was a debtor, right? Yes, Vijay was a debtor. Debtor is going out. It is moving out. So and cash is coming. Cash is cash is coming in. That is why in the date section we would be writing January 4th. What is coming in? There is an inflow of cash. Cash or bank, whatever you can write. Because it's not mentioned, you might write cash, you also might write bank. So cash account debit. How much cash? 1980 as your cash balance, or cash is inflowed 19. Let me write it properly. 1980. Discount allowed. Discount allowed is rupees 20. So what is discount allowed for? Think you are the trader. You are allowing me rupees 20 discount. So isn't this rupees 20 discount a loss? And that is why, and is the loss written in the debit side? Loss is a nominal account, and that is why loss, the expense or loss, would be written in the debit side. That is why discount allowed. Cash account debit, discount allowed account debit. To which asset? Which asset is going out? To Vijay. Vijay was an asset because he was a debtor. Vijay is going out. So to Vijay account. So what is this Vijay account? Vijay was a trade receivable. He was a debtor. And this Vijay, this person Vijay, this account, Vijay account was a personal account. I hope you are getting it. So cash account debit 1980, discount allowed account debit 20. So what would be debited? What would be credited to Vijay account? It should be 2000 rupees. And finally, our sum or this entry is complete. Being amount received from Vijay. Complete. Our entry, journal entry is complete. Now, let's come to our next entry. The entry on January 8. Purchase plant from Mukesh for rupees 5000 and paid carriage rupees 100 for bringing the plant to the factory and another rupees 200 in the installation charges. So, purchase plant from Mukesh. The name is given. It is a personal account. Cash or bank is not given. And that is why what we must write, Mukesh account. Why cash or bank is not mentioned? This name Mukesh is mentioned. And what is this Mukesh? This Mukesh is a personal account, and that is why this Mukesh name would be evident in writing. So, purchase plant. What is plant? Plant is an asset, Asset is coming in. What comes in is debit. Asset is coming in. What is going out? Nothing is going out. But there is an inflow of an expense. What is the expense? Expense or liability. Liability in the form of Mukesh. Mukesh would be payable. And that is why our next transaction as on January 8th. Our next transaction on January 8th would be the purchase of plant. Plant account debit. The plant account is debited. Why? Plant is an asset for the business. That is why plant account debited. Now to Mukesh account. Why? Mukesh is the creditor. Mukesh is selling his goods in credit. Why? Because why we are taking Mukesh as the creditor? Because no cash or bank is given. The plant is not purchased by the payment of cash or bank. So Mukesh, the name is given. It is a personal account. So Mukesh name would be evident. To Mukesh account, and it is said that rupees 100 cartage is paid and rupees 200 installation charges are paid. So there are two assumptions. You can take two assumptions. Number one is this entire rupees 100, rupees 200 and the rupees 500, these three are only credit balance or the outstanding balance. And the other assumption can be this rupees 5000 is a creditor, but this rupees 100 as cartage and 200 as the installation charges are paid in cash then and there. At that point, cash is paid. So I am taking the second assumption, and that is why plant account debit to Mukesh account to cash account. Why? Through cash, the installation charges and the cartage is taken. So, what is the cost of the machinery? The cost of the machinery is 5000 plus rupees 100 plus rupees 200. Why? Because this 100 rupees and the 200 rupees is a once in a lifetime expense for the plant. That is why it should be capitalized. So these three forms up the cost or the price of the plant. 5000 and 300 rupees. That is why plant account debit. What is the cost, historic cost of the plant? 5300. To Mukesh account. Mukesh account would be 5000. Why? Mukesh would be paid later to the amount of rupees 5000, and cash is paid rupees 300 for the expenses on installation charges and also expenses on cartage. So or this entry is also completed. Next, the time for narration being plant purchased on credit. Our entry is complete. Our entry is made. Let's extend our journal. So, did you notice we started the sum then and there? But this should not be the case. We cannot do like this. In the beginning, prepare ledger accounts on the basis of the following transactions in the books of a trader. the name of the trader is not given. And that is why in the beginning of this journal we must write in the books of a trader. If name of the trader is given, it would be in the books of dash dash trader. Then the name what we are preparing journal, it would be given. So now our next entry is on January 12th. Sold goods to Rahim on credit rupees 600. Goods are sold on credit to Rahim. So Rahim would become a debtor, and a debtor is an asset for the trader. That is why Rahim is also a personal account. That is why the date would be January 12th. Rahim account debit to the trader is selling the goods. For purchases, there are purchase account. For sales, they are said as sales account. And that is why Rahim account debit to sales account. How much? Rupees 600. Rupees 600. Transaction value is rupees 600. So now the time for narration. Being goods sold on credit. The trader is selling on credit. That does not mean Rahim is a creditor. Rahim is becoming the debtor for the trader. A debtor is an asset for the trader. So I think you are noting that every transaction, every journal entry ends with a line, with a continuous line that is drawn only in the particulars column. So next, our next transaction, Rahim became insolvent and could pay only 50 paise in a rupee. तो इसका ट्रांजैक्शन वैल्यू क्या होगा? 50 पैसे इन रुपी मैं एक्सप्लेन कर चुका था. 50 पैसे इन रुपी, एक रुपी होता है 100 पैसे से, और 50 पैसे 100 पैसे से उसका मतलब क्या है, कितना परसेंटेज? इसका मतलब हो जाएगा 50%. रहीम से 50% पेमेंट मिला और बाकी जो 50% है वो बैड डेट हो गया. बैड डेट का मतलब क्या है? What is the meaning of the bad debt? Meaning of bad debt is that debt or that trade receivable that will never be received. The chances for receiving a bad debt is zero, and such debts, the chance of whose recovery is negligible, are known as bad debt. So Rahim has become insolvent and 50 paise in a rupee was recovered. That is why Rahim was an asset. That is why Rahim was a debit balance. Now he must be credited. Why? The asset should be destroyed. To destroy or cancel the asset, we must write it in the credit side. So the date January 15th. Next, our entry starts. Rahim would be credited, and what is coming in? The expense. Number one, the expense. What is the expense? Bad debt is the expense, or loss. Bad debt, when a bad debt occurs or when a bad debt takes place, it is an expense or loss for the firm. All expenses and losses are debited, and what is coming in? Cash is also coming in the form of cash or bank. An asset is coming in. The receiver is debited, and that is why what comes in is debit. Cash is debited. That is why cash account debit. All expenses and losses are debit. That is why bad debts account debit to Rahim account. Rahim was a asset. Now the asset is cancelled. That is why the asset is credited. How much amount? 600 amount. 600 was the amount in Rahim's account. That is why 600. 50% is received in cash and 50% is bad debt. That is why 300 debit side, 300 here in the debit side. So cash account debit 300, bad debts account debit 300, to Rahim account 600. Now time for the narration. Being Rahim's debt settled. Rahim's debt is settled. Now the time for our next entry and the last entry, the last transaction. Sold goods to Ram for cash rupees 1000. So the entry is on January 18th. In the date section, in the date column, January 18. Now the goods were sold for cash. So what is coming in? Cash. Cash is an asset, and that is why it should be debited. And the sales, there is a sales. Sales is a credit balance, and that is why the sales account should be credited. Always remember, purchase is a debit balance and sales is a credit balance. When there is a purchase or sale, we do not transfer them to inventory account, but treat them treat those transactions as purchase account and sales account, because purchase and sales is the most important part of a business. It is the basic activity or basic operation of that business or a trader, and that is why, as the sale was against cash, cash account debit to sales account. How much? The value was, I think, 1800, and thus in the credit side also 1800. Let me check once. Yes, sorry, it was 1000 rupees. So the entry is cash account debit rupees 1000 to sales account rupees 1000. Now the time for the narration, being sale in cash or cash sales made. So with this entry, we come to the end of our journal. Now it's time for the ledger posting. We would be posting this. We will be posting then these entries, these journal entries in the ledger, or we would be making a ledger posting. So, an easy trick to make ledger accounts, we must count the number of accounts that are needed. And if any other account is added, we must make this. So, our first account, cash, then bank number 2, 3, inventory, 4, building, 5, trade receivable for Vijay and Madhu, that is 6 accounts. Now, 7th is Anand, trade payable, 8 is capital, 9 purchase, 10 discount allowed, 11 discount received, 12 plant, 13 Rahim, 14 bad debt, 15 no 14 up to 14. So at least we need to make 14 ledger accounts, and if there is any shortage we must add the ledger accounts. So first of all we need to write in the T shaped. We all know ledger is an account, it has a T shape. So we would be making like this. So kind request, please draw a proper ledger account in your registers, and I will be making like this in shortcut. So how does a ledger look? Let me show you once. A ledger has a T format. A T format, one side is debit and the other side is credit, and each side is divided into 4 columns. First column is the date, second column particulars, third column journal folio JF, and the last column is rupees. Similar to this side, date, particulars, journal folio, and amount rupees. So this is an overall format of a ledger. You need to make 14 such accounts, or the number of accounts that should be drawn like this. 14 accounts for this sum. So now let me draw up this. So in my sum, in my solving, this is the debit side and this is the credit side. I am drawing up the particulars column. Okay, let's avoid this and let me draw up proper account. As this is your first sum, so this is the debit side, this is the credit side. And for your information, this writing of debit and credit is very important. Our first column, date, second column, particulars, third column, journal folio, and last column, amount rupees. Similar to the debit side, we will be creating this credit side: date, particulars, journal folio, amount, rupees. So this is an overall account, and over here we need to write the name of the account. This is the cash account. So I need to select this up, and I would be copying a little bit of shortcut. So now our next. So I hope you are preparing your 14 accounts, and let me make it and resume the video. So I hope all your accounts are made. Our first account, cash account, then bank account, then inventory account, then comes building account, then trade receivable for Vijay, Madhu. Now Anand as a trade payable, capital, purchase account, cash account is already there. Now new account, cash discount. For your kind information, trade discount is not shown or not disclosed in the books of the purchaser. जब एक परचेजर को या फिर ट्रेडर को ट्रेड डिस्काउंट मिलता है, ट्रेड डिस्काउंट डायरेक्टली जो गुड्स है उनके परचेज प्राइस से लेस हो जाता है, लेकिन वो जो कॉस्ट का वो जो ट्रेड डिस्काउंट है वो अलग से डिस्क्लोज नहीं किया जाता है. Now our next account is Vijay, that's already there. Discount received, and discount here received in the form of cash discount. Now discount paid or discount allowed. Then plant account. Plant account consists, sorry, plant account consists these two accounts, the cartage and installation, because they are capitalized. Next, sales account, Rahim account, bad debt account, and another again sale, it's already present. So let me show you the accounts. First one, cash account, then bank account, then comes inventory account, then building account, then Vijay account, next Madhu account, then Anand account, next capital account, Next comes purchase account, then discount received account, then discount allowed account, next plant account, then comes sales account, then Rahim account, bad debt account. So our accounts are made. Now let's start transferring, or let's start our ledger posting. First of all, it's given the opening balances. The debit balance of cash in hand 8,000, cash at bank 25,000. Cash in hand 8,000, cash at bank 25,000. So cash and bank both are assets. All accounts, all ledger accounts are started first of all giving the year 2020, then the opening date January 1st. So how we start, how we post our opening balance? To balance BD. BD stands for brought down. To balance brought down 8,000. Next, here 2020 January 1 to balance BD 25,000. Next, cash done, bank done, inventory 20,000, building 10,000. 20 and 10. Inventory, opening date to balance BD 20,000, building opening date to balance BD 10,000. Then trade receivables of Vijay and Madhu 2,000 and 2,000. 2,000 each. So Vijay opening balance, sorry, opening date amount is 2,000. Madhu opening date to balance BD 2,000. 2,000 is the amount. So done. Now trade payable for Anand 5,000 and capital 55,000. Anand. So Anand is a trade payable. He is a liability. That is why, and capital is also a liability. And that is why we all know that trade payable, a liability or an obligation is a credit balance. And that is why Anand will have a credit balance. This side, in the right hand side, opening date by balance BD 5,000. Capital is also a credit balance. It is a obligation for the business. Opening date by balance BD 55,000. Now it's done. Our purchase account, sales account, these transactions, the transaction accounts are not bearing any opening balance. These are the opening balances. Now let us start with the ledger posting. Our first entry is purchase account debit rupees 4,000. So what is the entry? Purchase account debit rupees 4,000 to cash account 3,800 and to discount received account 200. So let us come to the purchase account. We are at our purchase account. Purchase account debit. Purchase account debit. The date, first date of our transaction, to cash account, same date, to discount received account. How much? Cash is rupees 3,800, discount received 200. So purchase account is debited for 4,000 rupees. Now we all know that one transaction affects minimum two accounts. In this case, this transaction will affect three accounts. Purchase account affected. Now it's time for cash account, the first account. Now in this case, on January 1st, due to this purchase, cash is moving out. So cash account, this cash account would be credited. So in the credit side of the cash account, by purchase account. Now what would be the amount? Purchase account has debited, or sorry, purchase account has credited cash for how much? How much cash was required? Yes, if you guessed it, it's 3,800. I hope you guessed it, and my congratulations from my side. So 3,800 is the purchase. Cash account is credited by purchase account for 3,800. Our entry is still pending. Now cash account is given. Next is discount received account. This account would be affected. Discount received account. What is discount received? Discount received क्या है? Discount received एक इनकम का जैसा है. It is a gain. आपको अगर पैसा कम देना पड़े, वो आपके लिए इनकम या फिर गेन ही है. और हम सबको पता है इनकम्स एंड गेन्स आर क्रेडिटेड. दैट इज वाई discount received account, credit side. The date of the transaction 2020 January 1 by purchase account. And कितना amount से? 200. Purchase account has credited discount received for rupees 200. I hope this is clear. Now, so one entry, one transaction, three accounts affected. Purchase account, cash account, discount received account. So three accounts affected. Now it's time for our next transaction. This transaction is over. Now, January 4th, cash account debit 1980, discount allowed account debit 20, to Vijay account 2000. So, Vijay account is debiting cash rupees 1980. Vijay account is debiting discount allowed rupees 20. So, this transaction will also affect three accounts. Number 1, cash account. Number 2, discount allowed account. And number 3, Vijay account. So, let us start with the ledger posting. Cash account debit. So, what was the date? Date is January 4th. Cash account debit. The date of the transaction, that is January 4th, to Vijay account 1980. Vijay is debiting rupees 1980 to cash account. Next, what account would be affected? Discount allowed account. Discount allowed is an expense, it is a loss for the business. That is why all losses and expenses are debited. Discount allowed account debit. The date of the transaction 2020, January 8 to Vijay account. How much? 200. Now, what account? Who is crediting? The account that is crediting is Vijay account. Vijay account, the amount that was outstanding was rupees 2000. Now, Vijay account, this Vijay account is crediting himself, or Vijay is crediting. Vijay account is crediting. That is why Vijay account credit side, the date of the transaction 2020 January 8 by cash account, and on same date by discount allowed account. Cash account is debited for 1980. Discount allowed account is debited for rupees 200, and that is why our entry is made. Cash account debit, discount allowed account debit to Vijay account. I hope this is clear. So our this entry is also complete. Now the time for our next entry. January 4th, done. Our next entry is plant account debit rupees 5300 to Mukesh account 5000 to cash account 300. Let's repeat. Plant account debit 5300 to Mukesh account 5000 to cash account 300. So our first account is plant. Plant account debit. Debit side of the plant account. Opening date, the date of the transaction. What is the date? Let us see again. Date of the transaction is January 8. Sorry, in this I have given a January. Okay, January 4th. Okay, that this date is okay. And in the Vijay account I have given January 8th. This would be January 4th. My mistake, sorry. January 4th. So discount allowed also January 4th. Now plant account. Plant account's entry is on January 8th. Plant account debit to Mukesh account, and on the same date to cash account, Mukesh account for 5,000 and cash account for 300, 5,300. I hope this is clear. What was our entry? Our entry was plant account debit to Mukesh account to cash account. So in the debit side of the plant account, we wrote to Mukesh account 5,000 to cash account 300. Now cash account is credited on January 8th. On January 8th, cash account is credited by plant account. Plant account was debited, that is cash account is credited by plant account for rupees 300. And also another account that is affected is the Mukesh account. Plant bad debt, sorry, I think I missed out the Mukesh account. Madhu Vijay inventory. Yes, I missed out the Mukesh account. Plant sales Rahim bad debt. I missed out the Mukesh account. So let me quickly make a Mukesh account. So this is our Mukesh account. Debit, credit, date, particulars, journal folio, amount rupees, date, particulars, journal folio, amount rupees. So Mukesh account is credited on 2020 January 8. Mukesh account is a liability. Mukesh is liable to be paid rupees 5,000 by the firm or by the trader. So by plant account, how much amount? 5,000. I hope this is clear. Cash account was affected by rupees 300 and Mukesh account and is affected by rupees 5,000. The cost of the machinery plant, the cost of the plant. So this account is also complete. Plant account affected, Mukesh account affected, cash account affected. Now our next account or the next entry is Rahim account debit to sales account. A credit sale was made to Rahim for rupees 600. So Rahim is a debtor. Rahim is liable to pay cash to the trader. That is why for the trader, Rahim is an asset. That is why on the date, on this date of transaction, I think it was January 15th. If I'm wrong, please correct me. To sales account 600, Rahim account debit. What was the journal entry? Rahim account debit to sales account. So our account or entry is duly made. Now what account would be affected? The sales account. So the date, we all know sales, purchase account is debit balance, sales account is a credit balance. Why? Sales lead to income or gain, and every income and gain is a credit balance. That is why sale is also a credit balance itself. On the date of the transaction, I think it is January 15th again. If I am wrong, please correct me. It is by Rahim account. How much is the amount? 600. So the entry is Rahim account debit to sales account. So sales account is credited by Rahim account. Or this entry is made. Now the next, cash account debit rupees 300, bad debts account debit rupees 300 to Rahim account 600. Rahim's debt was 600, of which he paid 50 paisa in a rupee, and that is why 50% is paid in cash, rupees 300, and other 50% is the bad debt. So one transaction, three accounts affected. What are the accounts? Cash account, bad debt account, and Rahim account. Now let's do it. Cash account debit. What is the date? Date is, okay, the previous transaction was on January 12th. This is January 15th. So sales was on January 12th. And in the books of Rahim also, January, January 12th. Now Rahim's account, as we have came to Rahim's account, there is a debit balance of rupees 600 in the Rahim account. This 600 rupees has to be credited to destroy Rahim's account, to close Rahim's account. So on January 15th, what is being debited? By cash account. Cash account is debited for how much? 300. And on the same date, by bad debts account. Bad debts account is also debited for 300 rupees, and that is why the cash account is also the cash account debited on January 15 to Rahim account. How much? 300. I hope it's clear. It's clear as a crystal. I think it's clear as a crystal. So now what account? Bad debts account. Bad debt account will be affected. Bad debt. Bad debt is a loss, so it should be debited. Bad debt account debit. The date is 2020. The date is 2020. January 15th to Rahim account. How much? Rupees 300. So our January 15th transaction is also posted in the ledger account. Now the last, cash account debit rupees 1000 to sales account rupees 1000. Cash account debit, the date is January 18th. Cash account debit, on the debit side we are writing to sales account. Cash account debit to sales account, and the amount is, let me write this 300 properly. The amount is 1000. Sales account would also be by rupees 1000. Why? Cash account is debited for 3000 by 1000. That is why sales account is a credit balance. That is why on January 18th, sales account is credited by cash account for rupees 1000. And yes, our posting is successfully completed. All the ledger posting is done. Now it's time for the balancing of the ledger accounts. We need to balance the ledger accounts. We need to find the closing balances. Now let me change the color of my pen. Yes. So according to the rule made by us or made by the accounting bodies, the total of the larger or the greater side is written here. The total is written over here. The side, debit side or credit side, which has the greater balance is written in this. So let's welcome our calculator again. Yes, let's wait for our calculator. I hope the calculator is visible on screen. So let us do our calculation. As per my idea, as per our visual idea, it is shown that the debit side is more. The debit side is having a greater balance. So let us sum it up. 8000 plus 1980 plus 300 plus 1000, which is equal to 11,280. So within this box we would be writing this 11,280. So our calculation is done, our totaling is done. Now we can see that here in this portion there is a missing balance. Something must be here, कुछ तो यहाँ पे होना चाहिए ताकि ये जो इक्वेशन है ये प्लस ये 11,280 हो सके. ये इक्वेशन को टैली करने के लिए हम लोगों को क्लोजिंग बैलेंस निकालना होगा. इसीलिए जनवरी का एंड डेट को हम लोग मान लेंगे क्लोजिंग डेट है. वहां पे लिखेंगे बाय बैलेंस CD कैरेट डाउन. बैलेंस CD कब लिखते हैं? When there is a closing balance. For the closing balance we write balance by balance or to balance CD, that is carried down. So our calculation continues. 11,280 rupees minus 3800 minus 300. So our remaining balance is 7180. This is our closing balance of our cash account. Similarly, we need to close the bank account. So, frankly speaking, in this chapter or in this sum, I made all my adjustments through cash account. You can also do those transactions, those cash transactions through bank account. The transactions would be similar, entries would be similar. In the case of cash account, we would be writing bank account. So now we are closing the bank account. The highest total would be inside this box. So the highest is what? 25,000. And to match it up, in the closing date, January 31, by balance CD 25,000. The closing balance of the bank account is 25,000 itself. Now there is an inventory account. एक inventory account है, लेकिन but for the transactions of inventory, for the purchases we can debit the inventory, but for the sales we cannot credit the inventory. Why? When there is a sale, in case of a sale, we are writing this sale value, but within this sale value there are two things included. One is the cost of the goods and other portion is the profit. This two forms up the total sales. That is why inventory should be credited in case of a sale, should be credited for the cost as per matching concept, and profit should be transferred to the profit and loss account. So in this transaction or in this case, we would be leaving the inventory account just like this. Why? Because no information of profit or no information of the percentage of profit is given. Moving on to our next account, building account. We are now closing the building account. Next, we need to close the Vijay account. 2000 this side, 2000 this side. So no closing balance. But to close the account, we need to write the total. 2000, 2000. Now Madhu has not paid anything. That is why Madhu's 2000 would be the closing balance. Now I'm scribbling a bit to complete to end this video. I'm scribbling a bit. 2000. Now closing the account. 2000, 2000. Now Anand account. 5000 was in credit balance. No payment is made to Anand. So the remaining balance to balance CD 5000, to balance CD 5000. So Anand was a creditor. Anand was a liability. That is why he is a credit balance. Due to his credit balance, the closing balance is written on the debit side. I hope you remember from our past video. This concept is from our past video. Next, capital account. There is no transaction of capital, but we would be leaving it like this. We would not be totaling it. Why? Because we all know from our past video, capital includes the profit, the yearly profit, or the profit of an accounting period is first transferred to the capital account. It is a part of the capital or the owner's equity. But in this sum, the portion or the percentage of profit is not given. That is why we would not be adjusting the capital. I hope you get my point. If you are willing to adjust, you can. But frankly speaking, this type of sums will not be coming in your examination. This is just a practice video, and that is why we are leaving it like this without any assumptions or without any treatments. Now it's time to close our purchase account. So we all know that purchase account is not to bear any closing balance. Why? Because purchase account is a revenue account, is a revenue balance. And that is why purchase account should be transferred to the profit and loss account. Purchase account is a nominal account, and that is why in the closing date it should be transferred to the profit and loss account. We make an account at the end, that is a trading account. In the trading account we write up the purchases. So the purchase is for 4,000 rupees. The closing, the adjustment or balancing is done. Now it's time to balance the discount received account. Discount received is also a nominal account, and for similar reason it should be transferred to the profit and loss account. 200. Now discount allowed account. Similarly, discount allowed account is also a nominal account, and that is why it would be transferred to the profit and loss account. Plant account. Plant account carries a closing balance. Why? Because it is transferred to the balance sheet. So it is to buy balance CD is 5,300 rupees. Sales account will be transferred to trading account or the profit and loss account 1,600. Rahim account would be only total, no adjustment, no closing balance, 600. 600. Bad debt is also a nominal account. It would be transferred to the profit and loss account. Next, Mukesh account. Mukesh account is a personal account. That is why it will carry a closing balance to balance CD. How much? 5,000. And that is the end of this video. If you want an Hindi explanation and any explanation of this sum in Hindi, please give me or write to me in the comment section or DM me directly. And if you like this video, please give this video a like and subscribe to my channel for more such interesting videos. I hope this chapter, this practice was very useful to you and was useful. Yes, I think I'm back. Yes, I hope I'm back. I hope this video, this practice video was useful for you, and I hope you like this video. If you have any suggestion or any feedback, please write to me in the comment section. Give this video a like and subscribe to my channel. Thank you for watching. Keep subscribed, stay safe, stay healthy, and keep studying. Bye bye.